Impressive day today with two more of our price objectives closed and in the books. A short-term time frame formation may have the potential to assist price with a fall or an upside continuation. Something in the charts could be signaling a small opportunity before a continuation. Let's begin. Welcome back to the channel on this Thunder Thursday. This is ARCa. Let's dive into FNGR. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in to ticker symbol FNGR here. And this is the 30-minute chart that we were observing yesterday with the 9 exponential moving average crossing upside of the EMA 21. And as you can see here, the price action ended up meeting not one right here, right? But two of our price objectives, right? So huge price action coming out of the ticker today, right? We were expecting a potential top side of 675, where price actually ended up going all the way up to 683. So pretty good on that end, right? And now the center of the triangle price objective was set to go to 640, where we ended up moving price to, let's see, the OHLC up here, right? Let me go ahead and hover over that candle. Yeah, it looks like what was it? 544. Yeah, nice. 644. Perfect. So let's go ahead and now move on to the next chart. I want to see what the other perspective was, right? The falling wedge because of these candles coming beneath the right angle triangle. So let's go ahead and take a look at that now. Okay, so yeah, this one actually ended up giving us a little bit of a closer read for a top side target, a further target, right? And this target ended up coming up to right here, right? We're highlighting it right here at 665. Of course, price action ended up going to that 683, right? So, but nonetheless, we actually said that this could be the range for our resistance, seeing that we had the one spot 618 at 667, which, by the way, was a very difficult target to combat when we, this was the FOMO candle, right? This is the that candle that just takes it up to the top and then it corrects back to the mean. So it came right back down to the one spot 272, where we signaled that potential entry, right? Paper trade right down there. So some people definitely caught that 640. Congratulations if you did. And I know that some other people ended up catching the 556 and even the 570 from when I was talking on the space calls, right? So congratulations to you all if that is the case. I'm not sure that this is drawn correctly at the present moment. I do believe that there is some type of converging price, and I'm not sure if it's a pennant itself, right? It could be a larger time frame bull flag, right? It could also be a shorter time frame pennant, but I just chose to put it on the 30-minute here since this formation itself was on the 30-minute, and this is how we figured the top side target. So I guess for now, if we can make any sort of adjustment, maybe I guess we could do it like this. And I guess we can keep into consideration a couple other things, like I guess we're not going to make too much of a difference there, right? Okay, so you know what, we can go ahead and speculate with top side target for this, right? So let's go ahead and take target number 1, right, which is from the top side of the triangle all the way to the bottom side. Apply that to the supposed area of breakout, which I guess could be I don't know, tomorrow or something, right? But please remember that this type of formation can lead price towards the downside and to the upside. The only difference is that when it's built during an upside, it's called a pennant, right? When it's when you have this price action converging the way it is, right? So this generally leads to an upside continuation. Now, it's not always the case, right? It just favors the bulls. Please remember that it can be traded both ways. But if we were to continue to the upside from this target here, it shows that we can actually touch down on the target that's very close to the 2.72 at 717. You can see here that we were reaching at about $7.12. So please go ahead and continue watching this video, because this is not a straight upside. I actually do see a downside first before we can continue to the upside. And I would really like for you to kind of listen in on the video. I'll try to make it as fast as possible, hopefully not a whole movie, right? So please make sure to stick around and watch as much as you can, right? So please remember, team, that I definitely have opened up 30 seats for the ArcMastersCourse. And you could reach out to me here at ArcMastersCourse@gmail.com to get yourself enrolled for this. Remember that this is a 16-week mentorship program, right? And it's a whole master's course, right? So please remember that you can reach out to me. And I said that this was not going to happen again, but here I am doing it again. And it was in respects to a few DMs that actually scared me from a few investors and retail participants, right? So let's go ahead and kind of open up the opportunity one more time and kind of dedicate ourselves here and see if we can push onwards and forwards, right? And I think, or upward in this case, right? So yeah, team, go ahead and get in touch with me there. I think 18 seats have now been taken. So it's only been, the better part of about a week and a half that it's been announced, right? So it's coming up to an end, team. I can't really take on too many people as it is very difficult to have a large group, but please go ahead and get in touch with me right there. Okay, team. So yeah, let's go ahead and look at the second target, which would be the center of the triangle, right? So let's go ahead and take that into account as well. And so what you're observing here, me doing, these are the very basics of technical analysis. I usually favor statistical analysis, right? But this, in order for us to understand what these targets can look like, we can use formations like this in general TA in order for us to understand where we could be, right? One of the first targets that we can see could be $6.90, which is very much confluent with the 2 fib at 696. So let's go ahead and start drawing in our resistance ranges, right? Because they are going to come into heavy use as soon as we can. Sorry, guys, that's my dog stepping all over the wood floor here. All right, buddy, kill it. There we go. Yeah, they will be useful as soon as we are in the live session tomorrow, right? And we'll go ahead and take into account this one as well. So that's 712 to 717 at the 2-spot 272. Okay, so now we have 2 ranges of resistance from the current zone where we are. Please remember, I'm expecting a pullback first, though, okay? So now let's go ahead and move on to the next chart here and see what else we have. Yep, so this was the topside target that we were observing here, coming up to the 4-spot 236 at 688. Whoa. Hold on, I'm going to sneeze. Oh my goodness, wow. My eyes just got so watery. My nose just got all insane right now, out of nowhere. Man, all right, here we go. Let's continue. I think I'm good. My eyes feel so good, though. They got really watered up. Anyway, so yes, 4-spot 236 at $6.88. The top side of this daily candle came up to, you can see it right up here, right, in the OHLC, open, high, low, close. You can see $6.83. Of course, we already touched on that, but it's important for us to be reminded, right? So yes, it did work out pretty nicely, although I will have to say that failing this top side would introduce the potential and the re-entry opportunity of maybe back down to 640 to 650, okay? Of course, we still have the 3-spot 618 at 657, so that may actually work around there too. So we have a few targets to kind of keep in mind here, okay? So if I can be a little more exact, I can, right? So let me in fact, I'm just going to give you 2 ranges, okay? Because it's a little difficult to look at this and say that, for a fact that tomorrow, we're going to reach this and we're going to reach that. It doesn't work that way. It's very difficult to do this. So, especially for me to just grab the cojones right here and just say, okay, guys, here's the topside target for tomorrow, right? It's you can only imagine the pressure that I would be under for it not to work, right? So, as you know, I'm not perfect. Things don't work a lot of the times, and I would encourage losses instead of wins, right? In order for us to really understand how the market cycles work. True lessons and true tuition here, right, team? God, do I know that. Anyway, so let's continue the next chart here. And now this is the 12-hour time frame, which is taking into account after-hours activity. So if we go back one chart, you can see here that we closed the market at $6.72, and the after-hours close came out to $6.60. Quite impressive, by the way. And also this. Notice this. This is officially the first 12-hour candle that we have closed since this one back here in October 2nd of this year, right? So this is really good. This is really good stuff, and especially seeing that the kind of, let me see this right here. Yeah, what was the daily volume? Let's go ahead and take a look at that. Daily volume came up to 1.42 million, right? So yeah, 1.42 million is looking good. It's not the biggest volume in the world, but absolutely showing some buy-side interest. Okay, so the reason why I'm saying that this is a pretty big deal here is, given the one outlier here that failed, right? That was the target that we faced at 797 before, or 737, right before the one that we did at 797. Sorry. That is, it's particularly important because of this. Check this out. Yeah. Okay, so this could be one. Yeah, right here was the first candle closure upside of the resistance from the Gaussian band. We just touched down, tested it, and continued onwards, right? Really, really high up. Just to give you an idea over what that can be, from the opening of this candle here. This one. Right, let's go ahead and measure that. That was a pretty nice move. That was around 31.88% to the upside, going from $4.69 to $6.18, right? So pretty big price action there. And coming back over here, you can see here that this was the first candle closure that we got on the 12-hour upside of the Gaussian bands. And then, that happened, right? So let's see. Here is another one right here, closing upside of the Gaussian band, and we got that move to happen there too, right? So, here were a couple other ones where we didn't actually continue to the upside, but that was preparation for this move here, right? So another one over here, we never actually got the close upside of the Gaussian band there, and this one here, we got another closure right here, and price action just exploded to that 1010 target back in October, literally this year, around the same time, right? So we faced that top side in October of last year. So it's very, very interesting to see this kind of rhyme for another potential run to the upside. Another closure right over here, price action continue to the upside, right? So yeah, I'm thinking that we are in the beginning stages of a potential mass breakout, and I'm not sure if that's going to be tomorrow or tonight and pre-market. I don't know, right? But what we can do is observe the resistances and historical supports and all that good stuff and volatility, right? In order for us to kind of guide ourselves towards this, towards the end goal, right? It's important for us to at least take it step by step and not try to take 100 steps at a time, because definitely your legs don't reach there, right? But your legs certainly reach 2 or 3. Let's just take one at a time and be safe, okay, team? Let's make sure that we can walk that lady with the cane 1 step at a time. Anyway, so yeah, enough of that terrible analogies here, but here's another really important fact coming out of FNGR. This is the weekly time frame, and as you can see here, this weekly candle is going to close upside of the SMA 10 yet again. I really wanted to see this close upside cleanly, upside of that SMA 10, but without this bottom side, we would have never gotten that opportunity to long at 556, right? So that was the target that I was talking about between 552 and 559 a few days ago, and you can see here price action essentially rejected from that SMA 10, since it is proving itself a worthy support for the larger time frame. 18 hours and 53 minutes to close, which is pretty much tomorrow. Tomorrow at the end of the session, we're going to close this weekly candle and see what the effects are from this come Monday, right? So now let's go ahead and move on to the next chart and try to finish this off, right? So 15-minute time frame. Yeah, we already observed this in a 30-minute. This is that pennant that we just talked about, right? The only reason I wanted to look at this was because of stochastic momentum versus volatility. You can see here that we're expanding right now beyond the 15%, which is critical contraction, with a downside pivot. Notice here that we also have a downside pivot with this RSI, and it's using that SMA 14, the moving average, as a resistance, right? So now it's coming down to the gravitational zone here. Let me go ahead and just kind of put this out like this. And so you can see clearly what it is. Oh my goodness. I guess, it doesn't matter. What I mean by clearly is that the RSI looks like more like this here, right? Or I can even show you just on the regular RSI chart. Here you go. These are the RSI charts, right? Just like this. So the only reason I have them marked off like that is because I would like for you to understand what zones are which, right? So if you're looking at, let me go ahead and go back to the present moment here, because we really need to read whatever that is, right? So yeah, let's push it. Here we go. All right, so yeah, the upper half is your bullish control zone, lower half bearish control zone. Every single junction here has a gravitational zone, 2% up and 2% down. And you can use those for your advantage. They don't always work, but they do work most of the time. right? So you can see here that price action or the RSI signal is reaching that gravitational zone from the bull weakness percentile. So this is bull strength, bull weakness, bear strength. Right, so you can see that we're about to get pulled down here, and it's very likely for it to happen in the 15-minute immediate short-term time frame. We have outbound cash right now. Cash is not flowing in the immediate short term, and we actually have the DMI slowing down just a little bit. So contraction would be happening here, and this would be getting ready for a potential upside. Right, so now going up to the 30-minute time frame, let's see this. 30-minute time frame is probably corrective, right? I want to see if we can find ourselves the RSI signal above the SMA 14. So let's go ahead and just kind of move up the time frames here. Okay, that may be a little too big of a jump into the hourly. Oh, that actually may be the one. Okay, so this can arguably work, right? Because we have this, we have the SMA 14 here serving as a support, but we're in the gravitational zone of the bull strength percentile. So this would actually come back down, meaning that we would go to the bi-hourly time frame and potentially use this as that bounce area. So now that we're seeing this on a bi-hourly time frame, what could that mean for a pullback? I guess we can speculate. Well, what do you know? We have the EMA 7 located right at about 649. And earlier I said what as far as pullback? If you remember correctly, I know you do. That's right. Yes, you do. We said 640 to 650 potential pullback, right? So let's go ahead and kind of drop the window there just a little bit, and let's start observing what the EMA 9 looks like. And what do you know? The EMA 9 landing at 642. That's literally where we're talking about, right? We're talking about the potential drop to the areas of about 640 to 650. Let's go ahead and correct it a little more though, because there still is a potential to drop a little lower than 640, and I will tell you why. Okay, so now let's go ahead and observe these candles here. Let me close out the bottom window so we can have a clear picture over what I'm about to show you. Get rid of the moving averages too, and focus on price action, the raw price action here, okay, team? First of all, 12 bi-hourly time frame, decreasing volume with increasing price. That is a bearish divergence, giving us the hint that we are facing a downside. Another thing here is that we have an evening star candle right at the top of a trend. Usually suggests a downside continuation. The following candle after this would be the validation candle for a continuation to that way down. We got that following candle. We got the dropping volume here, and let's see. What else do we have? I think that's about it right there. Okay, so now let me show you why and where we could potentially stop. Notice this big green body here, okay? Notice also this wick coming down to this area of about 645, and notice this wick coming up to the area of about 636, right? The space between these two wicks, it's an ICT strategy, right? It's usually known to work best on the 2 and 3 minute time frames, and in Forex. Okay, so this is not a traditional equities strategy. Is actually made and developed by the inner circle trader himself, and he developed this to be traded within the Forex or maybe even futures in the minute to 3 minute or even 5 minute time frames, and it is called a fair value gap, right? So this fair value gap here signals a potential area of support and or resistance. So this, in all essence, yes, a fair value gap, also known as a price imbalance or an imbalance, right? Sorry, team, I'm just hearing my little guy over there making, I don't know what kind of ruckus. So, all right, anyway, let's go ahead and continue here, team. This is potentially where price can land. So now let's bring up our moving averages to see if we have anything near there. Well, you know, I'm suspecting here that if price action does continue to the downside here to reload, the EMA 7 would essentially be located there by that time, and the EMA 9 would probably be located there by that time as well. Right, so just in the event of any messing around here, right, we always know that we can come back down to 615 or 622. Here's our support. But this is honestly what I'm thinking here based on the bi-hourly RSI, this drop here. Right, so let's see. And yeah, good. So let's go ahead and move on to the next chart. And just to kind of point this out to everybody, right, the ABCD strategy that we've been observing here for quite some time is working out just as we said, right? So usually This is X right here. You have A that would immediately be a short play, right? A hands it off to B for a long play, and then B hands it off to C, and then so on, right? So this is usually how the market cycles play out. That doesn't mean that we're going to reach all the way to the top side there. It just means that this is a traditional strategy and one of the original strategies made for trading traditional equities, right? So yes, it's still looking pretty good. Definitely on the bull's end right now. So now let's go ahead and move on to this last chart, which is the RSI. Check this out. Proving our theory, the 30-minute RSI is suggesting a continuation to the way down and playing off of the gravitational zones very much so. Check this out. This is the gravitational zone. Remember, 2% up or 2% down. We got the resistance from the SMA 14 and the gravitational zone. Obviously came back down, right? Now, the next time frame, of course, you already know the bi-hourly. We're already looking at this potential downside for the targets that we literally just spoke of, right? Upon this correction here, I do expect a bounce because this is very close to the gravitational zone of the bull weakness percentile. So essentially we could use the SMA 14 and that gravitational zone and have us bounce to the upside, of which then maybe this can start correcting towards that upside. Same situation here with the 6-hour time frame. So pretty much everything is kind of dependent on the bi-hourly time frame, and we'll see how this reacts tomorrow in the live stream as well. But moving on to the 8-hour time frame, please notice that the RSI signal is sitting very much inside of the gravitational zone of the bull weakness percentile, highly likely an upside continuation. Same situation here with the bi-daily time frame. As you can see, we are now breaking this regression and we're about to cross upside of the SMA 14. Why? Because we're in that gravitational zone where we can get pulled to the upside, right? Looking very good. Same situation with the 3-day time frame. Bullish crossover the SMA 14 in the gravitational zone, upside likely. And in this case, the 5-day time frame, bullish crossover, but right at the 50% mark, right? Or at the gravitational junction. So we'll find out exactly what will happen there come tomorrow market end, and then we will see how the price reacts on Monday. All right, team, you know the upside targets, you know the probabilities here. Of course, there are still more targets to observe, including 797, 884, right? We have 10, I think, 61. I think we have 1283. A lot of targets to go, but we will get there when we will get there. Let's go ahead and make sure that we can cross that bridge when we can get there, right, team? One step at a time. Make sure to get that lady up there without having to skip up the stairs. She can't do it. Relax, you bulls. Okay, degenerates over here, man. I love you guys. All right, so please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, and forever. I need you to do your own due diligence and everything will be absolutely cool. But with that said, team, I wish you well a very good rest of your night, and I will catch you at the bell mañana. Adios.